The target rate probabilities for the June meeting, which is coming up in 3 weeks, there is a 63% chance of rates going to 525 to 550 basis points, which is a 25
And you know
basis
what's going to
point
happen
hike.
if that happens? More people turning real estate back over to the lender, more people unable to roll over personal debt, more people going to the car dealership and realizing that the car loan is double digits. It's going to keep going.
This debt ceiling issue underlies a bigger problem in our society. And in fact, is the government running out of cash soon? That's the question we'll be examining with our next guest, E.B. Tucker, editor of the Tucker Letter. Welcome back, E.B. Always great to have you. How are you doing?
Thanks for having me.
All right, I'll just cut to the chase. There's a lot of talk about the government running out of cash by June. Janet Yellen herself stated this concern about a month and a half back. Is there merit to this concern that the government may be running out of cash?
Well, I mean, it's tell people ebtucker.com is where you're reading that, and I mean, people are crazy if they're not reading it because you can read most of it for free. And it's if I was starting my career over, that'd be the one place I would go is ebtucker.com to get caught up on things. Everybody's confused about the debt ceiling. I mean, I'll be out with friends and having dinner, and they're panicked, they're worried, and so. It's a setup, it's a staged event. I mean, the government gets money from two places. Number one, it takes it from you and threatening you with the IRS, or number two, it prints it on a printing machine. So those are the two ways that it gets money, and it's going to get plenty more money. The government gets bigger and bigger and bigger, and any sort of short-term panic it's a total farce. And as you know, I explained to people that when I was a kid, I was on the edge of my seat, always watching WrestleMania and all these things. And I thought it was real, but it's not real. Roddy Piper did not beat the Hulk. The Hulk is the best of all time. Everyone knows that. And I met him. I can tell you that in person. I have a picture in this week's newsletter. But anyway, all this stuff is theater. It's a distraction. You're going into Memorial Day weekend. Everybody's going to be worried about this, and then the debt ceiling is going to go up. There is no debt ceiling. It's a fake term. And it's kind of like the Social Security Trust Fund. It makes it sound like there's, actually a pool of money there that's safe. It's not true. These are made up things. These are words. These are marketing slogans. The government's going to get more money. It's going to get it from you.
Look at this article from CNN dated May 19th. So about a week ago. The Treasury Department is steadily draining the funds it has to pay the nation's bills during the debt ceiling impasse. The Treasury had $57.3 billion in cash on hand as of Thursday, according to federal data.
Yeah, it sounds scary. I bet you what happens is this weekend, people are going to take a trip and they're going to go to the airport, and there's not going to be enough TSA screeners, and they're going to say, there's not enough federal people to organize the airplanes and the tower out there. And because of this debt ceiling, and maybe even because of Trump or something, I mean, there'll be some, whatever the spin needs to be to get people upset about this. And it's a crisis, and our elected leaders need to solve it. And all we need to do is get through this together. We're strong. We're the strongest place in the world. We have the best French fries of anybody. We're the most delicious, hamburgers, and that's what makes us great. And so we got to do this, and they'll raise the ceiling, and the congressman will say we had to do what we had to do. But you know what they'll never do is they'll never cut out hundreds of billions of dollars of things that are totally senseless, that are designed as kickback schemes to people that are connected. And those are never going away. What's going to go away is the TSA guy, or the person that's running the passport office. Those are the people that are going to go away. It's the same trick every time. Don't be fooled. If you read my newsletter, you realize how this is going to play out. Don't be fooled. And let's talk about the big picture, David. The big picture is the show goes on, all right? The inflation goes on. It's a really big problem right now. They talk about there's no inflation. There's tons of inflation. And I'll tell you what else is a problem is that there's nobody to work. I have a gorgeous lap pool at my house, and I'm swimming laps, and I want to have somebody help me with like advanced swimming techniques, like how to work on your breath longer, and, like these things, because I'm a decent swimmer, but I'm not a really great swimmer. And I thought, I'm going to hire somebody to come over. So I hired these people, $500 for 6 30-minute swim lessons at my house, kind of a lot. Guess what the lady tells me? Please bear with us. We don't have any teachers right now. I'm like, wait a second. So you don't have any teachers? What is this? Like a lot of money. Yeah, you had to pay to schedule. Well, we don't have any teachers. Wait a minute. This is swimming. Now, I don't want to offend anyone out there that's a swim teacher, because swimming is hard. I mean, I realize that swimming is hard because I'm trying to swim better and faster, and it's really difficult. Okay, but swimming in someone's pool and teaching them, like if you come to E.B. Tucker's house to teach them how to swim, that's not exactly rigorous work. That's actually, it's kind of fun. We got music out there, there's some speakers in the rocks, and there's, the sun is out, and if you want, some coffee or something, it's a pretty good work environment. It's not exactly like digging a hole on the side of the freeway or something. So my point is, there's nobody. Okay, so if you want to get, work done on your house, there's nobody. Okay, what I'm saying to you is that like there's a lot of bizarre things going on. So what do you do? Don't become a swim instructor. I'm not advising that. What you do is you say to yourself, what is this going to look like in 5 years? Okay, David, people all the time are asking me like about advice about these little tiny things that are happening like tomorrow. That doesn't matter. What matters is how you set yourself up for 5 years from now. Inflation is a huge deal, and the government loves it. They love inflation. You know why they love inflation? Because taxes are a percentage. They're a percentage. When the stock market goes up, tax revenue goes up. That's why tax revenue is down right now, is because the stock market has gone nowhere. So you got to make more money. You got to position yourself for inflation. You got to position yourself to win and to keep playing this game. This is a game that I show in the newsletter this week. The debt doubles every 8 years. It doubles every 8 years. It doubles. I said that in 2016. People said I was crazy. It went from 19 trillion. It's like 35 right now. It's going to double by the time President, His Majesty Joseph Biden Jr. gets reelected again. I mean, hopefully he's lucid enough to understand he was reelected. But basically, the debt will have doubled. That's 38 trillion. Guess where it's going to go next? It's going to double again, 76 trillion. People have a hard time understanding this, but it's all about the percentages. It's all about the percentages. So you got to position yourself. You got to position yourself in the market. You can't worry about what's going on tomorrow or like next week or something. That's short term. But what's going to happen after that? And I'm telling you what, if you're positioned right, you're going to keep on, you're going to keep floating higher, and you're going to look back and you're going to say, I understand how this game works now.
About the level of debt going up, you're right. The public debt as a percentage of GDP has gone up. What does this mean for inflation, output, economic growth, the engine of our economy, which is
you got to think about it like an engine. So if you're an average person, you're an engine. You're driving down the road, okay, and you're driving an empty car. You're going fast. There's nobody in the car, but you start piling stuff in the car, boxes. You hook up a trailer. You start dragging a boat. You put some stuff in the boat. It gets heavier and heavier. That engine starts to have problems. And so the way you think about this is like, you say you make 100 grand and you have 20 grand in debt. You have a 20% debt to income ratio, right? But then let's say your debt goes to 80 grand. You have an 80%. Then it goes to 200 grand. You see how you have 200%. It keeps growing and it becomes unsustainable.
I see where you're going with this, but I can't print money. I can't just create money.
That's the problem. Yeah. So as long as the US can print money, everything is groovy. So, and also as long as interest rates are zero, everything is groovy. But interest rates are not zero now, and everything is not groovy because they're spending $1 trillion servicing the debt at the moment. So what's going to ultimately happen is they're going to create all this fake panic. They're going to raise the debt ceiling. They're going to say we all have to do our part, raise taxes, raise fees, all these things. Then they're going to start lowering interest rates. Then there's going to put some more money back into the system because they need asset values to go up. The government wants asset values to go up because you can't tax falling asset values. If you have the stock market go down 70%, people don't pay tax for years and years and years because they have losses. Think about it. This is the thing. It's basically a continuous boom with the occasional giant panic. You remember the COVID panic? It was like 3 weeks. So anyway, so what do you do? The question is, what do you do? Because we already know how this is going to work out. Now, I want to talk about something people are not going to see coming. This right here, I don't know if you can see this. Okay. I mean, I have some items here. This is obviously my paperweight. This is 100-ounce silver. I love have that on my desk. Nobody steals that. They don't know what it is. But this is a pound of copper. And everybody is knows about copper, and everybody's getting it wrong. Not everybody. I mean, there's some people talking that are like Druckenmiller, Friedland, all these guys are getting it right. But this is a massive opportunity. You know that copper goes in everything that we're trying to do right now. You have all this Inflation Reduction Act things happening, all these solar panels everywhere. All this stuff is going on. Chips galore, AI, all this stuff, copper. And I'm telling you, there's not enough. There is not enough copper. And people know that I play copper through Nova Royalty. And I just think that people have forgotten that this is a massive investment trend right now. And it's very different from what's going on in this overall. Everybody's panicked about the debt ceiling. They're distracted. I mean, it's you find these opportunities. I mean, people need to follow the news with Nova. They need to read the news that's going on with Nova and watch. I'm not going to tell people. I want them to look for themselves, and they want to see what Brett and I are doing. I mean, this is right here is really what's happening the second half of this year. And I think they're distracted. They're so distracted.
The price of copper has fallen dramatically since its highs. So,
well, I don't know that that's the main. I don't know that that's the main point. The main point about copper is that there's lots of gold mines in the world, right? Like there's lots of small gold deposits that can be mined, but with copper, you cannot mine a small copper deposit, only massive. And you're starting to see in the US government, there is a huge initiative that they're saying, wait a second, we actually don't have access to this. And now we have a problem because we have all these hippies picketing the one or two projects that actually can be built, which means that we now have to get the copper from guess who? The friendly Chinese. This is a huge problem. It's huge. It's a huge problem. See, gold is not a problem because the gold price is like a submissive employee. It does whatever you tell it to do. All you got to do with the gold price is set the price wherever you want using the futures market. No problem. But copper is a different ballgame because you can't do that with copper. You can't do it. And so the way to play copper, in my opinion, is with copper royalties, which nobody knows what's going on with that except for Franco-Nevada and Nova Royalty. I'm telling you, this is a huge deal, and everybody's forgotten about this. They have forgotten about this, and they're on CNN watching what's going to happen with the debt ceiling. Janet the Jackal Yellen and Mr. Price Fixer Jerome Powell, it's just like WrestleMania, are the focus of everything. So what are you missing while you're focusing on that? That's the question. And I'm telling you, it's the second half of this year, copper is where the fireworks are going to be. And now's the time. We have a holiday weekend. Check in with these things that we're talking about. Check in with them. Nobody's done this for a long time. Nobody has looked at this. And this is where the opportunity is right now.
What's the thesis here? From the demand side or the supply side?
So you have massive supplies that are right now being wound down. So like you have mines, like you fly into Salt Lake Airport, you go through Bingham Canyon. What you see is that mine is 100 years old. I mean, Solomon Guggenheim is the guy who put that mine together, and that's 100 years ago. 100 years. I mean, so what are you going to do? Like, you're going to look at Copper World in Arizona, the Hudbay project. This is the only viable thing. You can't have a small copper mine. Billions and billions and billions of dollars. So you have a royalty on that. That's 100 years of cash flow. I mean, imagine if you had a royalty on Bingham Canyon in Salt Lake 100 years ago when copper was 10 cents. I mean, you know what would happen? You would have an art museum on the Upper East Side designed by Frank Lloyd Wright, filled with all your art, which is what the Guggenheims did. I mean, it's a once in a generation. It's a once in a generation setup. And I just think people, what's happened is they're distracted. Because remember, we were always this pancake coin. We're always talking about this. The thing is that like all that pancake coin and sushi coin, all this, it's all worthless. And everybody now, do you know all these people that bought all this stuff that they're in pause mode. They haven't sold the pancake coin, but they're realizing that they got scammed and they're not sure what to do about it. You see what's going on? Don't worry about these people. What I'm saying to you is back to the how do you play this big picture, which I'm in the debt ceiling and stuff. You gotta position yourself. And when everybody's distracted, don't be part of the distraction.
You know what I don't want, EB? I don't want my lithium mines or my copper mines nationalized. That's what they're doing in Chile. So I'm going to ask you about jurisdiction risk.
Mexico. I mean, Mexico is nationalizing the lithium business. Mexico has got a law that's running its way through the legislature there that's reducing the amount of years you can work on a mineral claim. It's a huge problem. But I'll tell you where I want to get my copper, Arizona. And I don't want to build the mine because the costs are exploding to build the mine. I want to own the royalty. I mean, look, people, I'm not going to give all the specifics of Nova. I think people should read the press releases. There's a lot of like very structural things going on there. And I think it'll make sense if you read it. But that's why we continue to buy in Arizona. And it's Nova and Franco. That's it. You want to buy the copper where you don't have to worry about having a dictatorship come in. I mean, Arizona has problems like any place, but I'll tell you what they don't have is a socialist dictator that removes all the mining rights and nationalizes or federalizes locally. That's not going to happen. I mean, you're exactly right. I mean, it's a huge problem. And there's going to be a big premium. And think about it like this. I believe the world is trading in zones now. Think about the zone that you're in. I mean, you have allied countries like the US and Canada are going to work together, right? The US and the UK are going to work together. But the US and China are not working together. I mean, the Chinese are really grabbing control of the copper market. And it's not like gold. Gold is so easy. I mean, if you want the gold price to go to 2,100, you just put the gold futures at 2,100 and boom, it's there. Or if you want it to go down, like it's down now to 1940, all you do is run it there with the futures. It's so easy because it's super liquid. I mean, you could trade 50 million ounces of gold in the futures market in a matter of minutes. The copper market's not like that. It has a futures market, but it's tiny. I mean, you need the real deal. You need the actual product.
I want to close off on the stock market now. You had predicted a 20% pullback in stocks by this summer. Do you still hold on to that conviction?
I do. And I think people need to realize that the average stock in your portfolio is, check these stocks, probably not doing that great. The stocks that are going up, NVIDIA, did you see yesterday? Massive. I mean, it's like, added like $250 billion in market cap. Google, all the big name tech stocks are the stocks that are up. And if you own the index is benefiting because those stocks are up. And so I say in the newsletter, people can go and look in the Tucker letter at ebtucker.com. They can see these charts. The stock market it looks like this. It's like a little dome, it's rolling down like this. And you're being distracted by the Google and the big tech names, NVIDIA type names that are holding the market like this. But when you look at the market without those stocks, it's turning downward. And so it's just starting to warm up. It's Memorial Day. It's not officially summer. I'm standing by the prediction. I'd love to come back and visit with you about this prediction and be held accountable, like let's say later in the summer, because we really don't, we have till Labor Day, really. That's the deal. That's the summer. Let's see what happens. My suspicion is that the market had this little rally because of these big companies this year and is about to get very soft.
You don't think the Fed's going to reignite QE or maybe cut rates later this year?
Definitely they will. Definitely. I mean, the system doesn't grow without that. The system doesn't grow without access to more debt. I mean, you notice right now, I don't know if people, I'm going to write about this summer. All these big pension funds are turning over real estate that they bought using borrowed money at cheap rates. I don't know if you're seeing this, like Brookfield, there's PIMCO, there's all these groups are just giving the keys back. And these office towers have a lot of vacancy. These office towers had huge loans. They cannot be rolled over. It's a huge problem. And if you keep interest rates high, these buildings are worth substantially less than these funds paid for them.
Well,
so what are you going to do? What are you going to do? You're going to have all these asset prices going down. Nobody pays any tax. There's no transactions. There's no brokerage fees. There's no title company. There's no legal work. These things, the rents go down. See how this goes? The whole system gets smaller and there's no tax revenue. And meanwhile, you've promised people $100 trillion of future benefits down the road. How are you going to pay for that? It's impossible. So you have to reignite the easy money because the easy money keeps the thing going. So you tighten up the money, you bring things back under control, you flush out some of that extra. I have a chart in the letter this week, $5.5 trillion sitting in money market funds. So you suck out some of that money, you make people run around and solve problems and panic, and then you get the party started again.
But wouldn't monetary easing be good for stocks?
Definitely. Look at what Japan's doing right now. I mean, they're having they're holding this yield curve control, and the Japanese stock market looks amazing. I mean, so definitely. I mean,
so you think stocks will go down in the summer, stocks will roll over in the summer, and then later, when the Fed's ready to start easing, then it will have a recovery.
That's right. But one step at a time, because it's difficult to know what the timing looks like. I mean, it's kind of like people say, well, how didn't you know that the Fed would raise rates 5% in successive meetings? Well, gee, I don't know. Maybe because I'm not in the meeting with them. So you don't know what they're up to. The number one goal of the Fed, the number one goal is to preserve the power of the dollar. That's the number one goal. Number one. All this other stuff it's like when Hulkamania was going on and the Hulkster would come out and it's not about little details. Like there was a plan, it was pre-organized and it worked great. But everything else was chatter, David. It was chatter.
Wait a minute. The current target rate is 500 to 525 basis points, right?
Basis points, correct.
Yeah, 500 to 525 basis points. You know what's crazy? I kid you not. I'm looking at the CME FedWatch tool. The target rate probabilities for the June meeting, which is coming up in 3 weeks, there is a 63% chance of rates going to 525 to 550 basis points, which is a 25.
And you know what's going to happen if that happens? More people turning real estate back over to the lender. More people unable to roll over personal debt. More people going to the car dealership and realizing that the car loan is double digits. It's going to keep going.
You know what happened? It's because the PCE data came out on Friday. Today.
Ooh, the PCE, yeah.
Yeah, and it came in hot today. I mean, I'm just going to pull out the numbers, but yeah, basically inflation was hotter than expected, and then the Fed now is the probability of a hike shot up because the Fed now has to look into controlling inflation again by raising interest rates again.
Well, they're going to put the best man on the job, Jerome the price fixer Powell, and everybody knows he's going to win the title belt this year. And debt ceiling mania is coming up in a few weeks, and we should all take it for what it is, right?
U.S. core PCE inflation goes to 4.7%. 4.6 was anticipated. So yeah, harder than expected. Yeah. But so you were right about inflation being a concern. I mean, it's still kind of sticky. All right, so I'll just ask you point blank. Do you think the Federal Reserve is ready to raise rates again to bring down inflation to their 2% target?
They'll raise. Forget about the target, Saul. These guys will raise rates until they see the whites of people's eyes. When people are panicked, like they're scared out of their mind. That's what's going to happen, and that's not yet. I mean, you have more slack in that system than people realize. Like, I don't know any real estate people that are concerned. I don't know any homeowners that are concerned. It's like you look around and the restaurants are packed, the stores are packed, you can't get a car, you can't get a swim lesson. Think about that. I mean, the economy is booming. So you can keep raising and raising and raising. Now, just so people understand, If they had done this slowly, they would have had a disaster. See, when they go straight up, by the time there's a problem, they're able to go straight back down. Think about the COVID market panic, 3 weeks straight down, then 3 weeks straight back up. I mean, if you went on vacation, you missed it. So that's how things go nowadays. We are in a centrally planned system. Don't worry about these headlines. It's nonsense. If you go back and read the old headlines, you see that they were just as scary, and it's fanfare. There's all this fanfare in the centrally planned system. I mean, look, like I was saying, for years and years, I tend to navigate these things fine. I mean, wait and see. It'll be the same way now. I mean, it's once you see it, it's very easy.
Let me close off on this thought. You mentioned to me offline that to be successful, you've got to find your purpose, you've got to stick to your purpose, and just mainly have one purpose. Everything else is a distraction. You've mentioned that the ultimate goal of the Federal Reserve is to preserve the power of the dollar. Let's extend that to the government at large, this centrally planned system that you just talked about. What is their purpose?
Well, I mean, on a personal level, everybody watching should understand that the major definite purpose, Napoleon Hill talked about this, is your single-minded focus. You do that one thing right, you can basically mess up everything else in your life and you're fine. And so all of us need to find that major definite purpose. And people nowadays think that means some your children or your major. No, it's not like that. I'm talking about you as a person. Everybody's afraid to be a bit selfish about you, but what do you do? What defines you? What do you focus on? And so we all need to think about that. But the Fed's major definite purpose is to preserve the power of the dollar. The dollar is it's like a baseball bat. You walk around the world and crack people in the knees with it and make them do whatever you want. And that's what they do. I mean, there's a great book, that Perkins book, about how the World Bank works and the IMF. It's so easy to understand, is that without that strong baseball bat, nothing works. And you have to, right now, you have to strengthen your baseball bat. Got a little weak. Now it's like it's made out of balsa wood or something. And so you got to watch out, because the BRICS, the Chinese, the Belt Road currency, it's a huge problem. And what they've been doing is they've been making baseball bats out of wood that they take from countries in the Belt Road. We've been making baseball bats out of paper. And so the Fed's job is, if you don't maintain that, the whole system is worth nothing. Without that, it's just another place, with a bunch of unattractive houses that people live in, and also mostly unattractive people. But basically, that's the Fed's major definite purpose. That's their job. That's all they focus on. Because without that, all these billionaires have nothing. Think about it. You have nothing. What's your real estate worth if your dollar is not the strongest baseball bat? What is New York City worth? It's not worth zero, but it's not a premium. It's not the capital of the world, the financial world, if your baseball bat is weak. So the Fed's job is to strengthen that. That's their sole job. That's what they're doing right now. When you're cranking this thing up, you're making the dollars harder to get. So you print the dollars for years to create fake growth. Now you make the dollars really hard to get, cause a lot of pain. You get to decide who you rescue. Then you got to open it up again. This is centrally planned. If this was a market, David, it would never work this way.
Yeah, they risk slowing down the economy, which is, I guess, what's going to happen.
Absolutely.
But that's what not weaken the
So you're saying
dollar.
What does the Fed rate need to be for me to get a swim lesson? That's what I'm wondering. 7? At what point are people willing to drop what they're doing and come give E.B. Tucker a swim lesson? That's what I want to know. Yeah.
It needs to be.
Yeah, I mean, because right now, I guess the swim teachers are like, what are they doing? They're trading crypto or something, and they don't want to come over here. But what I'm saying is the economy's got tons of slack in it. They can slow it down. They're setting themselves up to do this. And imagine how many businesses finance poor ideas at 1%, and then they got to refinance at 7%. Impossible. It's impossible.
Where can we read more of your work and learn more about your thoughts?
ebtucker.com is the place to go. And just remember, second half of this year, when everybody's distracted with WrestleMania, copper. I mean, I'm playing Nova, and I want people to follow the news, not just what I'm telling you, the news. Follow the news, the press releases. This is a story. You got to see what EB and Brett are doing. Nova, 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 Nova. I mean, that's the deal. The second half of this year is about capital gains, and where everybody's distracted. They're so distracted. So ebtucker.com every other Thursday. You could read it for free. All right. You can know what I'm up to. It's you read it yourself. I can see that you read it. I know because we talk about it offline. It's the place to be. There's no these tacky advertisements. There's no distractions. There's no publisher. It's straight from the desk right here where you see me sitting right here. And that's important to me. As you know, I've been doing this for years, and I never liked having a publisher.
I wonder if Bloomberg terminals are recession proof, because it doesn't matter what you do, you always need one.
I've never seen a contract, by the way, this thing's very expensive. I've never, of all the contracts I've ever signed, it is the most onerous. I've never seen anything like it. It's extremely expensive. You can't live without it. And they know that. And so they lock you up in a contract that I think it's easier to get divorced than it is to get out of the Bloomberg contract. Yeah.
All right, we'll end it there. Thank you, EB. Thanks for your time.
All right.
Yeah.